Hey there, everyone! Welcome back to our channel. Today, we're diving into a topic that's becoming increasingly important for both investors and the planet: ESG investing. Whether you're a seasoned investor or just starting out, understanding ESG can help you make informed decisions that align with your values. So, what exactly is ESG investing? Let's break it down together. But before we get into the nitty-gritty, let me ask you this: have you ever thought about where your money goes when you invest? Do you consider the social and environmental impact of the companies you're investing in? If you haven't, don't worry. By the end of this video, you'll have a solid understanding of ESG investing and why it matters. So, let's get started. ESG stands for environmental, social, and governance. These three pillars are essential criteria used to evaluate the sustainability and societal impact of an investment. Let's break down each component. Environmental. This aspect evaluates how a company performs as a steward of nature. It looks at things like carbon emissions, waste management, resource depletion, and biodiversity. For instance, companies that invest in renewable energy sources, like solar or wind, score higher on the environmental aspect of ESG. Did you know that in 2020, global investments in renewable energy reached a staggering $303.5 billion? That's a clear indicator of how much focus is being put on environmentally sustainable practices. Social. The social criteria assess how a company manages relationships with employees, suppliers, customers, and the communities where it operates. This includes labor practices, community engagement, and product safety. For example, companies that uphold fair labor practices and prioritize diversity and inclusion tend to score better on social metrics. A striking statistic here is that companies in diverse industries are 35% more likely to outperform their peers. So, investing in socially responsible companies isn't just good for society, it can also be good for your portfolio. Governance. This component refers to a company's leadership, executive pay, audits, internal controls, and shareholder rights. Strong governance means that a company is transparent and accountable to its stakeholders. For instance, companies with diverse boards of directors and good governance practices tend to perform better because they are often more resilient to crises and better at strategic decision-making. Now, you might be wondering, why is ESG investing gaining so much traction? Well, several factors contribute to its rise. First off, awareness of social and environmental issues is at an all-time high. Investors are increasingly realizing that their investment choices can influence positive change. According to a 2021 report by the Global Sustainable Investment Alliance, sustainable investing reached $35.3 trillion in assets under management, a 15% increase from 2018. Moreover, studies have shown that companies with strong ESG practices often experience better financial performance. For example, a 2019 report by Morgan Stanley found that sustainable equity funds outperform traditional funds by an average of 4.3%. This trend suggests that ESG investing isn't just a feel-good strategy, it can also lead to healthier returns. Let's take a look at some real-world examples of ESG investing in action. One well-known company is Tesla. With its commitment to sustainable energy solutions, like electric vehicles and solar products, Tesla scores highly on the environmental scale. Investors who prioritize environmental impact might find Tesla an appealing option. Another example is Unilever, a consumer goods company recognized for its strong ESG practices. Unilever focuses on sustainability in its supply chain, promoting fair wages and working conditions for its employees. In 2020, Unilever announced plans to reduce its carbon footprint across its product lifecycle, showcasing its commitment to social and environmental responsibility. On the governance side, companies like Microsoft have earned high marks for their transparent leadership and commitment to diversity. Microsoft has consistently worked to improve its representation of women and minorities in its workforce, making it an attractive option for ESG-focused investors. So, there you have it. ESG investing is all about considering the environmental, social, and governance factors in your investment choices. It's not just a trend, it's a movement towards a more sustainable and equitable future. By prioritizing ESG criteria, You can help support companies that align with your values while potentially enhancing your investment returns. As you think about your investment strategy, consider incorporating ESG factors into your decision-making process. Remember, your money is a powerful tool for change. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and hit that notification bell so you never miss an update from us. And don't forget to leave a comment below sharing your thoughts on ESG investing or any questions you might have. Thanks for watching, and we'll see you next time.